Okay, let's get into GBP USD. Real quick, just like I do every time, I want to go to the monthly. I want to see what's going on there. And matter of fact, I'll take my drawings off. And you already pretty much seen the way I had it set up. But let me just go back here really quick just to plot off what went on since, well, I'm not going back to 2003, but we'll start at 2009. We'll put our support up. Let's go to the line chart. See support. Look at that. Start here. Okay, for the sake of entries, I'll stretch it out. Alright. Back to the candle. Perfect range. Oh, where's it at? Sometimes though. Alright, so as you can see, GBP is a good pair if you're looking for a lot of pips. This range right here is a monthly range, obviously. I don't trade this, but just looking at it, you see a range that has been trading in between for, it traded in that range for 7 years. Something like 7 years. 2700 pip range. Very good. I won't go into like detail about that over here, but as you can see, you got a clear break here. Sometimes these tools don't click. Okay. Clear break. Retest. And follow through. Huge follow through. Tighten it up. Okay. Follow through. So you can see that's real easy. If this was a lower time frame trade, then you could have took it here. You could have took that here. As soon as this broke here, you'd have been looking for a retest of the impulse, and that is here. It didn't exactly go that high, but it gave you here, and that is a valid zone. This is a monthly time frame, so there's probably a lot of activity just in this small zone right here. So you could have took it based off of the zone as well. See that? Easy trade. Okay. And then the follow through led you all the way here. So now we're looking at a range all the way like that. Another good range. Another strong, not as big as the last range, but big enough to where, you know, if you're trading this range, you're going to get enough pips. There's always money to be made. 2,000 pip range. That's not bad at all. Alright, so we're ranging again. I would say, let's go to the weekly. Based off the weekly, I would say we're in a downtrend. Why? Because the last impulse was here. This is the last point that pushed the market to its highest of this range. It's right here. You see that pullback? The green candle there? last thing that pushed the market up. So here's the high, here's the last impulse. Alright, now if we're looking in terms of just retesting impulses from the left side, again, line chart, and I'll change the color just for the sake of different time frame. You can see that's why the market stopped where it did, because this is an impulse over here, here, and these are all structure points. Higher low, higher high. You can call it higher low, higher high. You can call it structure point. You can call it an impulse point. You know, whatever is best for you. Just know that this creates a higher point of structure. And when you get a higher point of structure, just know that once it stops and turns around, it's giving you a pullback to either go higher or to go lower. And honestly, I wouldn't take any sales unless the next or this area was broken. That's when you know you get some strong sales. But even if you were just trading from the top of this impulse, from the bottom of it, if you would go down on the time frame, then you would see, you know, you still have 4-hour structure and daily structure, even 16-hour, 14-hour, 12-hour, all that you can get in on a sell going down, because even this is a good amount of pips in that zone. So let's go down to daily. All right. Okay, and we're in a downtrend, like I said, based on weekly. Let's go candles. All right. I will take this off for the sake of it just being so far over here that we're going into 2021. So I'm just bring it back over here. I will take this off. Let's clean it up a little bit. Okay. And I will change the body of the candles so you can see it better. Alright. So now that we're on a daily, we need to find the last daily structure points, the two last structure points. So we see a good, first of all, we're in a good range here, weekly range. But if we want to see new structure points being made, then start with the last one on the left side. We see that this point here is a last point, the last pullback that pushed the market lower to its low, here. So what do we need to do? We need to mark that, and that's how you find your first higher low to higher high, or your first structure point going up. And we'll basically just say is here, it was a clear break here, clear break of that structure point of this whole zone that was made right here, that's labeled by the green line. You see there's wicks right here. It wasn't passing this point, so you can create a zone there, and it clearly broke, price clearly broke that, gave you a retest of the low. Alright, so this is the pullback that led into this follow through. Okay, so what's the next structure point? Here. Alright, and that'll give you reasoning as to why the market stopped in its tracks right here. That, and also we got some liquidity over here that I guess we can say that the market is reacting to that too. So if you stretch it out, you can see the market is reacting to that as well. Okay, new point to beat is here. What beat that? This point. That's the new structure point. We drew that already. Now we have this point. What point beat this? That's this point. You know what I mean? And we can mark all those off, which I would do if I was back testing, just to see where the market is making new structure points, and back test where the market will react to. We got this right here, and on the daily it's really clean on this chart. So it's not always the case when it comes to the market. Sometimes it's a lot harder to see where the structure points are at. And it's real clean, really stair step on this. This was the last impulse point here, so this is a point to beat. This gives you your high. Trading view, man. Okay, what point beat this? This point here. You can see the small pullback we got here. It was able to shoot past two of them, actually, bring you all the way down here. But I'm gonna bypass marking all these structure points just to show you that this was the last structure point. That's clear. See the pullback there leading into the low. So all you need to know is that you're gonna buy in here or make a sell based on if the market actually beats this point. And I can delete this crap now. I don't need all this. I need to get a real mouse. Okay. So you can see the market beat this last point here with a breakout. Now the market could come all the way down here to retest this zone here, or this impulse point. But what we do know is it beat it. So now we're in between this one, this point, and this point. And now we're looking to make sells based on this range here, because this is the last impulse that laid it higher than this daily impulse. And once you got that, once you know where your range is at, once you know what you're going to be trading between making sells or high based on the low and the high, then you go down another time frame, and then you basically do the same thing. This was the last point that made the high. This point has been closed under, but nothing has stayed under. It keeps going back up. So now we have, let's tighten up your lines. Now we have three multiple touches here, and these two touches, so we know that this is weak. It could be broken at any time, but I would wait, if I was going to take a sell, for the market to get down under this structure point and close under it and show me some follow through. Then I'll be looking for entries, or break above this and give me some sort of retest and rejection. Then I'll be looking for entries going the other way. Simple. Do the same thing from the monthly to the weekly to the daily, all the way down to the 4 hour, and stop at the 4 hour when it comes to structure. But the lower time frames you can use for entries. So, and when it comes to taking a trade, you just, if you see your setup, you take your trade. Don't think too much about it. Don't let your emotions get to you. Just take the trade.